Okay, today we are looking at the Bollinger Band. So let's add the Bollinger Band main charts. You don't edit anything. So let's go back. So this is the Bollinger Band. The first time we looked at how to use the Bollinger. We said there are two strategies associated with the Bollinger Band: the Bollinger Bounce and the Bollinger Squeeze. So in this video, we are looking at how to use the Bollinger Squeeze. So let's squeeze in the chart so that you can see. The Bollinger Squeeze, as we said in our first video, is where there's a range and the Bollinger bands come together. It's where the three lines of the Bollinger bands seems to be very, very close to each other. So let's look for a typical example of the Bollinger Squeeze. Okay, we can see these points. This is a Bollinger Squeeze because the three lines are very close to each other. It happens in a range when the market is ranging. So let's go to that particular point. So we'll use the Bollinger Squeeze to catch. Let's expand it so that you can see it. We use the Bollinger Squeeze to catch breakout. So how do you use the Bollinger Squeeze now to catch breakout? When it's like this and you spot a Bollinger Squeeze, you just draw two lines, the upper line and the lower line. Note that this is a long squeeze because, okay, let's go down to the lower one so that you see it better. Okay, you can see these lines are together, but this is not a perfect Bollinger Squeeze. In a perfect Bollinger Squeeze, if you go to lower time frame, you can see that there was a long range here for a long time. So you touch the upper limit and you draw another line. You touch the lower limit. Then you can see two lines here. Let's use the lower one as the red line. Let's change the lower one to color red so that you can see clearly. Okay, so this is how you make use of this Bollinger Squeeze. I say Bollinger Squeeze is a place where the Bollinger band line come together as if they are squeezing together. So it represents a range. And when there is a range, there will surely be a breakout in either the upper direction, that is buy or sell. So what you do, how do you catch the breakout is that once you see a breakout out of the upper band, and you see one full candle form above it. You see one full candle, a full candle, not a doji, not small candles. Like you can see a full candle like this close above it. You enter a buy and you can use the lower limits of the Bollinger Squeeze, that is the bottom of the Bollinger Squeeze, as your stop loss. You see that if you bought here, there's a lot of profits you would have made. If you bought here, you'd have made over 500 pipes. So you can see other Bollinger Squeezes. This is also a Bollinger Squeeze, that region, but it's not a perfect Bollinger Squeeze. So you use the Bollinger Squeeze to catch breakout. You just note the upper and the lower limits. Once it breaks out and forms a full candle below it, forms a full candle above it, if it's for a buy, you buy. And once it breaks out in the lower, through the lower limits, and forms a full candle below it, you know that it has broken. There's a breakout, and when there's a breakout, the move will be massive, so you sell. So that is how you make use of the Bollinger Squeeze.